Everybody, happy Thursday. Welcome back to the morning show here on Stock Market TV. Big day for Stock Market TV today. We'll talk about that in a little bit. Spencer Israel, JC Parets, Steve Strazza still recovering from future proof. We'll be back tomorrow. But much to discuss. We're going to break down that Oracle reaction from yesterday. We got to talk about oil. Every day is oil. Actually, we'll talk about oil with our guest. How about that? Jason oh my God, Jason Shapiro. Jason Shapiro, crowded market report will join us today at 9. Kenny Glick will be here before that. Sean McLaughlin will be here after that. Good morning, chat. How's everyone doing? A little frazzled dazzled. We're all good. Let's slow down. I'm moving too fast here. Let's calm ourselves. All right. That is the plan for today. Big day on the channel, as I mentioned. We have Stephen Whitesell going live, Sean's going live, Kenny is going live, Louis is going live, the Gold Rush guys are going live, JC and Steve going live today at the close. The link, if you're watching this stream on YouTube, is in the description. I will also throw it up on the screen right now. There it is. allstarcharts.com/wave trader encore. Today at 4. You don't want to miss this. Trust me. Even if you saw Steve's thing last week, you don't want to miss this. So, big day for us. Much to discuss. But you're here for the charts right now. So, let's bring JC out and we'll do it.
Woohoo! Man, I can't believe it's already Thursday.
Time flies when you're back from vacation. I don't know. I just made that up.
You know how you know it's Thursday? You want to know a little JC secret?
How do you know it's Thursday?
Thursdays are an interesting day in my life for 2 reasons.
Because you're getting ready for like your big whatever feast you have planned for like the weekend. You're doing the prep now.
Nope, but I did make a nice mustard sauce for my pork chops last night, though.
All right,
A little too much lemon for my taste. I got to ease up on the lemon a little bit. But first timer over here. First timer. So Thursdays, 2 things happen. Yep. Sometime in the middle of the night, like 3 a.m. or something like that, or 1 a.m., early, the American Association of Individual Investors publishes their results of whether individuals are bearish or bullish or neutral stocks over the next 6 months. That happens early in the wee hours of Thursday mornings. Later on that day, which is today, we get an Economist magazine cover, right? So couple of reminders. Oh, today must be Thursday. And as it turns out, it is. And you could see so far, we got some of that data. Boy, did we see a spike in the bears. Did you see that?
No. That's why I did not see it. That's why I have you.
See, so that came out this morning. Look at that. 4 weeks in a row, more bears than bulls. Big spike week over week. Look at the positioning. Look at the short exposure in the next chart. This was from Goldman Sachs. These are hedge funds. They are the most short they have been since the last bear market in 2022, and the NASDAQ doubled after that. So that's interesting. And then, so this one comes from macro charts here. The next one, this one's showing the skew between calls and puts. So are they buying call options, betting on rising prices, or are they buying put options, betting on falling prices? And to what extent is one doing more relative to the other? We're at levels, rarely seen throughout history in terms of the amount of puts being bought, protection, insurance, all of those things, however you want to describe it. And then finally, this one comes from our friend Todd Sohn. Shout out to Todd Sohn, friend of the show, one of the best friends of the show. In fact, last week was the first week of net outflows from equity ETFs since roughly April of 2025. Do you remember, Spencer Israel, what happened after April of 2025?
Well, I remember what happened in April 2025, and yes, I do remember what happened after April 2025. There was a lot of headlines and a lot of confusion about some macro stuff that may or may not be happening, and nobody was really sure if we were going to be like an epic trade war forever or not. And yeah, there was fear, and then it all kind of just resolved itself to the upside. So that's actually not that dissimilar to where we are right now.
So I just thought, listen, I'm just a guy. I'm just a rando dude, fin bro, whatever you want to call me, just trying to make money in the market and making observations so that we can try to make more informed decisions. And these are just some of the things that stood out to me this morning.
Okay. JC, I know you love your your official like headlines from like government organizations. So the big headline this morning is that we are officially in the middle of the biggest oil supply disruption in the history of the world. That's according to the International Energy Agency.
And this is it's got to be on a nominal
intergovernmental
basis, right?
organization. Yes, everything. JC, life is on a nominal basis.
Right. So is there a denominator? Is there a denominator fallacy here? It sounds like there's a big one.
So in case you needed an intergovernmental organization to tell you that things are kind of cuckoo right now in oil markets, there you go. They released 400 million barrels from the reserve yesterday, and then today they're saying, hey, yeah, just so everyone, if you didn't know, now you know. This is like the biggest supply shock that we've ever seen. So, I know you care about such things.
I don't know that
these
I don't know that I believe all that
declarations. Okay, fine.
I don't know that I believe all that it's the biggest ever. Maybe on a nominal basis. I guess I'd have to see the numbers, but my spidey senses are pointing to this being a denominator fallacy. So like just raw numbers. Raw numbers, I could see that. But just history of the world,
yeah,
probably.
Raw numbers are how we measure things. So
that's not actually how we measure things. We don't measure things through raw numbers.
Well, that's how society.
Apples to apples. It's like saying oh, the Dow was up 100 points today. Today, the Dow up 100 points is irrelevant. 50 years ago, the Dow up 100 points is like the biggest thing that's ever happened ever. So no, we don't measure things on an absolute basis. Like we look at things relative.
I see headlines every day: Dow up, down, 400 points, 500 points. So yes, people. That's
you got to put things in listen. I call it that too, but I know the math. The Dow's at 47,000. So if the Dow's up 500, it's up about 1%. It's down 250. It's down about 0.5%. Like I could do the math in my head, right? So I calculated in numbers. I mean, it's just what it is.
All right. Yeah. The normal folks don't account for denominator bias in everyday life for things, right? Law of large numbers, things get bigger over time. So every
and that Spencer Israel is the life arbitrage which the market allows us to exploit for our own selfish endeavors, which in this case is to make money.
You hear that, everyone? Life arbitrage. That's what we're doing over here. We're doing life arbitrage. We're doing
max only.
Market arbitrage and life arbitrage.
All right, what do you say we do a little state of the market and do a little of that market arbitrage? Hey, it's money making time. Let's go.
Yeah, right.
All right, guys, we got the Dow this morning down 420 points, right? Down almost 1%. It's just like we were saying. S&P 500 down 0.75%. 6730 down 50 handles. NASDAQ 100 futures down about 0.75%. 24,800 down 172 on the NASDAQ futures. 30-year bond futures down 0.25%. 114.5. Crude oil making serious moves today, up 7%. Looking forward very much to talking to Jason Shapiro today, someone very astute follower of investor positioning.
Yes.
Very, very much looking forward to that conversation. Most definitely, we'll be talking about crude oil, 7% today, 93.5 per barrel. Copper, pretty flat this morning, 587. Gold, flat this morning, 51.75. Silver up 2% this morning, 87 even, with the VIX at 26, pricing in about a 1.5% move every day for the S&P 500. Right now, it's about half that, about 70 bips. So market right now pricing in double what the market is doing so far today. And then, of course, over in funny money land, Bitcoin, 70,400. Flat today. Ethereum flat, 2,065. Solana flat, 87 and change. And the total crypto market cap, Mr. Spencer Israel, now up to 2.38 trillion. 2.38 trillion. You guys excited for Shapiro today? I'm stoked for him. He's the man.
Yeah, it's been far
He's
too
also
long.
a Miami Dolphins fan. Fun fact.
It's been far too long. So I think we last spoke to him around like the shutdown, maybe. I was in like, when was that? September? October?
No,
I don't know.
great.
I don't remember. So
listen, I want to talk about a couple of big things happening right now. Big things. Can we talk about big things, Spencer?
I think that right there, if you add that concept, the idea of big things, to the list of lessons I have learned from JC and Steve, is just if you can get the big things right, you're doing better than most. Forget the little things, just get the big things right. So yes, I'm always ready to talk about big things and big themes. Let's go. What do we got?
So just bigger picture, look at small caps. Right?
Look at small caps. Okay.
So look at small caps.
caps.
People talking about, breath is bad. Is breath bad? The Russell 2000 closed at the highest level ever last month, right? Ever. Coming out, taking out the 2021 highs and the 2024 highs and going on and hitting the highest levels ever. Why does this matter? Well, when you talk about market breadth, think about the Russell 3000, represents approximately 98% of all investable assets in the U.S. equities market. And this is 2/3 of that. You want to talk about market breadth? So I think one of the best, I forget who said it. I think it was Jeff DeGraff, probably the one who said it. He said, if the Russell 2000 is pushing up against new all-time highs, you probably don't have a breadth problem, right? It's 2/3 of the Russell 3000. So the question is, it's like, all right, are we going to break out and go higher? And this massive base going to resolve higher? Is this a massive whipsaw and it's all about to fall apart, right? That's the binary situation. Technical analysis doesn't give us all the answers, but certainly goes a long way in helping us ask the right questions. And I think that this is a good question to be asking. Was this a massive failed breakout and now down we come? Or is this just a kickback, a classic retest that we've seen so many times and now they can move on? And what I find really interesting, you have a question?
Yeah, you say the Russell's pushing up against new all-time highs. That's a little loosey-goosey, right? I mean, we're 7% off the all-time high. I don't know if that's pushing up against.
We're 10 points off an all-time high. Hold on.
I'm looking at the IWM, which same thing.
We're at 270, and right now we're at 252. So we're 5% away from, right?
7.5%.
From all-time highs. We close at the highest levels ever at the end of the month, right?
Just saying that's a little loosey-goosey definition of pushing up against all-time
point
highs.
is, this is a 5-year chart, Spencer. It's a 5-year chart.
My point is,
with you.
My point is, we're 3/4 of the way into a correction, right? Isn't correction 10%?
No, that's just a made-up thing.
that's what they tell me it is. At least
I know they're lying to you. That's not.
We're 3/4 of the way there. So how can
whoever's telling you that is lying to you? So look at emerging markets. 10% is just an arbitrary number. It means nothing. And if you think it does, and I'm not talking to you, Spencer, anybody out there who thinks that the number 10 means anything at all, or 20, God forbid, you're fucking crazy.
We're almost halfway to a
emerging markets are doing the same thing, right? We've been in the camp that this is huge base, potentially a historic breakout on emerging markets. If you zoom out, this goes back 20 years. It's a big level. What are we doing? Are we retesting these levels? Right? And then finally, the worst of all of them, I think, is financials. Right? So financials already below those former highs. Granted, they broke out above those 2021 highs a long time ago. So this is a different scenario. But nevertheless, on a more zoomed in basis, below those highs from 24 is not a good look at all. So I would point you to the largest component of financials, which is Berkshire Hathaway. You could throw that up there. This 12.5% of the S&P 500. You got a lot going on, long-term uptrend, Uncle Warren retiring, the whole thing. So I think that, this is a big chart. People talk about the Mag 7. Like this is like the one that's not one of those that could be in the group, right? So just something to think about.
Yeah, I mean, in the past few days, financials have fallen behind. I look at like the month to date and last month, sector performance, and financials have fallen behind real estate, fallen behind utilities, right? It hasn't been a good week. So, yeah, I'm and chat's talking about it too. I'm sure there's this is just private credit stuff, right? Just kind of making waves in the sector. People are there's some headline risk there, which is frankly what you should expect. It's the financials after all. It's one of the most headline risk sensitive sectors there is. Every time a bank blows up in Kentucky, right? Financials get hit.
You know what a bummer. I've never been to Kentucky.
Oh, you should. I mean,
I know.
Well, you're not a big bourbon guy, so I don't.
Yeah, but I would appreciate that sort of thing for sure. And I have been a bourbon guy, and when I do drink spirits, I do drink whiskey. So like, I would definitely appreciate it, number one. I get invited to the Kentucky Derby all the time. I've never gone. I would love to go see some college basketball down there, Louisville, Kentucky. I mean, that would be sick. So there's a lot of reasons for me to go there. And I've never been. It's a bummer. It's one of those things.
It's a very, very pretty state. Extremely pretty.
I can see that.
A lot of rolling hills, a lot of caves, largest cavern system in America.
Is that true?
It's got the largest cavern system in America. Yeah, there's like a ton of caves. Yeah. I've been to Kentucky. So yeah, great state. Would definitely go back. Anyway, yeah, financials, private credit funds are not blowing up, but they're on the precipice. So yeah, that's gonna happen, right?
Throw up the beat sheet. Throw up Oracle. It was pretty impressive how that held in yesterday.
It's funny you say that. I mean, yes, that's one interpretation. When I looked at the chart for like 5 seconds after the close yesterday, my first thought was, oh, you know what? Oracle did the same thing after the open that I kind of did the whole pre-market session, which is go down, right? Like it popped, it ripped off the open, and hit the high of the day or whatever, like 10 o'clock or whatever, and then just kind of drifted lower the whole rest of the day. But it was enough of a pop to obviously make it have a good day. So
it pretty much closed near the open. Danced around throughout the day.
That's my point, right?
Yeah.
Yeah,
but that was 9% higher that open.
No, I know. I just thought it was funny. It was like it ripped higher. What day is today? Thursday. It ripped higher Tuesday night. All Wednesday morning, kind of basically traded down the whole morning. Ripped higher off the open, and then kind of just traded lower all day, right? But it did hold the gains. It held the gains, which is what you want to see. It held the gains from overnight. Just funny, right? Most people trading Oracle yesterday were trading it in like a down tape for the stock because the high of the day happened at like not at I don't know the exact time, but it was early. So I just thought that was funny. The high of the day was at 9:46.
I think I'm with Daniel on this one. Held a fat gap. I never heard of it quite put that way.
Yeah, it did.
Fat gap.
It did. So this goes in the books as a good reaction because it held the gap. That's exactly right. But
I want to point out, some people were asking yesterday how come Oracle wasn't in the beat sheet. It's because it hasn't finished the day, hasn't even started the day yet, right? So I had to finish the day. Here it is on the beat sheet, right? So it's how it reacts the next day. So some people are going to give you some like AI recording of the conference call and all this stuff, and they're going to pretend to give you all the information. What I like about the beat sheet is that it doesn't work. None of that matters. All of that is a waste of everybody's time. The only thing that matters is how the market interprets the earnings you see.
Yeah,
That's why I like this one.
So for people like Kenny, for example, this is like a classic short yesterday, and you probably did it, and it probably worked. But it goes in the books as a good reaction to a good report.
And you know what's interesting is that Bitcoin continues to act well, Ethereum continues to act well. Like all of these, remember I showed you in the show yesterday, Ethereum overlaid with Oracle. You like that, huh?
I hadn't seen that before. Yeah, I thought it was good. Sometimes I think the relative charts that you guys show or the overlays are just kind of too cute, but that was a nice one. I enjoyed it.
Throw it up, slide 10. So, the relationship, I think software, when you think about bear markets or massive corrections, right? Right, look at that overlay, Oracle and Ethereum. So when you think about massive corrections, everyone ever has its culprits, right? That's what Ari Wald calls them. And I haven't come up with a better name, so we're going to call them culprits.
The culprit being like a news event?
The culprit being the group of stocks that are dragging the rest of the market down that particular cycle.
Yeah, I knew what you meant.
Whether it be like the ARK stocks and biotechs and Chinese and all the SPACs.
Yeah, ground zero. There's always a ground zero.
Financials in the great financial crisis, tech stocks in 2000, right? All of those types of stocks. And so you can argue that if you're looking, and then when I'm wondering if we're going to have a massive correction or not, I wonder who the culprit is, because there has to be one. So if there is one for this particular cycle, who's it going to be? I mean, it's got to be software, right? Got to be software, at least so far. I mean, who's the biggest culprit? That one. Well, software stocks stopped going down, right? With crypto. And this was...
Wait, hold on. When you say this particular cycle, what are you referring to? Like the last,
the one we're in.
Yeah, but when did that start? I guess is my question.
Probably a year ago, April. Right off that key low, and then we got the ripper.
Okay,
you know what I mean? Like every like bear market, every like prolonged correction has a group that are the leaders to the downside. Like they're all different. They're different all the time, right? Yeah. If there's going to be one, this one, it's going to be software, right? So I think that if you're looking for the culprits to be exactly that, you're looking for breakdowns of software. If you think that this is just a rolling correction and sector rotation underneath the surface during an ongoing bull market, you're looking for lows here in software. So what I'm saying is there's something here for everybody, but understanding the culprit sort of perspective and mentality and approach to markets, I think is helpful in this case.
Yeah, there's always a ground zero, whether and it's usually a specific industry group or a specific like factor at play. But even if you drill down within that, there's always going to be like a handful of individual names, right, that are within ground zero. They are the true epicenter of the destruction, right? And like even within, like if you looked at like ARKK as like the ground zero for the post-COVID bubble popping, you can say that ARK was the epicenter, but within ARK, it wasn't evenly distributed. There is stocks that only went down 50%, and stocks that went down 95%, right? Oracle is probably, I don't know. I get what you're saying here, but like I mean I am confused because we're not in a bear market. So
right, but every bear market has its culprit. So if you are anticipating a bear market, that's the culprit to be keeping an eye
on. Okay. Yeah.
Right?
All right. Yeah, I'm with you.
That's the point.
Yeah.
I wanted to bring this guy up. We got Kenny in the house today?
Yeah, we do have Kenny. He's here.
All right, cool. We'll bring in Kenny. I just wanted to point this one out. This was good. I thought this was coming from Andreessen in one of his interviews. He does a lot of media, believe it, so there's a lot of like really good stories. And, if you're interested in the history of the internet and the history of like, angel investing and venture capital and stuff like that, it's always good. Andreessen, kind of laid out how he consumes information. And as somebody who is very self-aware of how I consume information, very like I do it with a lot of intent versus maybe 20 years ago, 15 years ago. Like I've learned a lot over the years. So this is how he does it, which which is not that dissimilar to how I'm doing it. So real-time news on X, right? So that's where he gets his real-time stuff, right? Not wasting his time on other websites. X is enough. Twitter, right? I agree. Books older than 50 years old. I like books in general. I have a lot of friends that are authors. I don't necessarily need to go over 50 years old, but I get the point, and I'm with them. Ignoring newspapers and magazines, again, agreed, but I do like the covers and I do like the headlines from a sentiment perspective, right? And I think he might agree with that, by the way. And then he also likes, and this is really, really key here, this one hit home hard. He finds practitioner-led newsletters to be a superior, underrated resource, and I fucking couldn't agree more. I could not agree more. Why do you have to go through the journalist to tell you a story about what the trader or the economist or the analyst or the venture capitalist said when you can go straight to the source? I have found so much value in this. I remember reading Barry Ritholtz's blog every single day. 2005, 2006, 2007. Brian Shannon. His videos, I would race home after work in 2005 to watch Brian Shannon's videos.
Yeah.
The practitioners, far superior. I couldn't agree more. So I just want to give a big shout out.
I would just say with regards, I agree with what you said about bullet point 1. I agree with him about bullet point 3. With regards to bullet point 2, there's a vast variety of content within the newspaper magazine realm. There's like noisy BS, which is a lot of it, and there is like really good like long form stuff. And 95% of the stuff that I read is like 5,000-10,000 word articles that are in newspapers and magazines. They're not noisy. They're just really interesting stories. And you can learn a lot from that stuff. So I would just caveat the bullet point 2 and just say
it's the exception that makes the rule, Spencer.
There is a lot of noise. You have to kind of like figure out how to sift past it. All right,
let's think Shannon is better than Andreessen. Okay. That's like saying like, oh, sushi's better than steak. Like they're just different. Like, you know, that's like saying like I'd rather go. I don't know.
All right, let's bring on Kenny.
All right, bring on Kenny. Then we got Jason Shapiro in the house.
Oh yeah, we got a day.
It's been a long time coming. They ain't come from my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
All right, Kenny Glick, what's shaking, baby?
Is it my face? Is it my face, ladies and gentlemen? Is there something about my face that you just want to take your fist and put it right in my suck hole? Is that what it is? I'm curious, my friends. I just had this revelation last night, as I do a lot of times. Is it my face? When I come on, I tell you I have a trade that works every single time. Is it my face? Do you not believe me? We're at 1,289 in a row yesterday. And we're talking about Oracle and we're talking about Nike. What's up, my friends?
Wait, was I right? That was what I was saying 10 minutes ago. That was a classic
earnings gap VWAP reversal. How am I doing?
Yes. If Oracle wasn't the king of all trades, the king of all trades was shorting that Nike yesterday because, voila. So, my friends, why were we shorting Nike yesterday? The answer is because it got upgraded. So my whole career, going back to 1994, okay, when I was sitting there with my mentor, Isaac, learning about market making and the box and who's the axe and learning about order flow. And one thing I noticed, and it was blatantly apparent, when we saw a company put an upgrade on a stock, you would think they'd be on the bid that day, buying into their upgrade, right? But we found them to be on the offer. And we used to call them, hey, what's the story? You just told the stock this, you just put an upgrade for 30% on the stock. How come you're on the offer all day? And they said the same thing every time. Well, we're using this opportunity of strength.
Right.
One of our clients wants to lighten up on their position. Oh, is that right? Okay, yeah, great. Thanks.
Look, Kenny, I'm a recovering purveyor of the analyst ratings. I used to take that stuff, believe it or not, I used to take that stuff seriously.
Oh, yeah. Never. Yeah. By the way, if you're in a stock and you get 3 upgrades in a row, dump it. But yesterday on the Nike upgrade, and I said, all right, here's our chance. Watch this stock plummet all day. But wait, don't short it yet. Let's just wait for VWAP to confirm the conspiracy that's been going on for 30 years. And like clockwork, there's your Nike. You had one moment where it tried to recover and then rolled over below the VWAP, below that low point, sinking beneath the waves, never to be heard from again. Thank you for the upgrade, Mr. Analyst. Once again, geniuses.
All right. Well, then here's my question for you on this conspiracy.
Yes.
The analyst upgrades the stock according to your conspiracy. Someone else, a client or whatever, wants to lighten up.
Right.
The trader executing said trade on behalf of said client, they get measured on the VWAP, right? On their execution compared to the VWAP. So you're saying basically they had to do what they had to do like right away because it never saw the VWAP again after whatever time
in this
that
case, why it was such a lovely trade is that we just had it again, just like an earnings play, gapping up on earnings or an upgrade. Just wait for that rollover, and then it goes to the orange line. And once it couldn't stay above prior day VWAP, like I said, it sank beneath the waves. But the idea, the conspiracy is that they're just upgrading it so their hedge fund buddy could dump more of it because he didn't get out of the entire position yet.
And if you think that's not out there happening all the time, you are crazy because these guys are at the Knicks game the night before or at the strip club or whatever it is that they're doing. And if I'm not saying that absolutely happened this time. Could have very well happened. Who knows? But it definitely happens is the point all the freaking time. And
this is why I'm not, again, this is why I love VWAP so much. If you don't think it just proved the theory, then I don't know what to tell you. But let's go take a look at this Oracle. Like here it is. You knew we were fading this stock, right? But when do you fade it? I got a plan. When it rolls over breaks the VWAP, and then you can't stay above it. So these little moments right here, you don't got to be a hero. You don't want to get in the way. Just wait for it, my friends. Just wait for it because the magic always shows up. And then it starts. There's a classic downtrend, and it's being confirmed by VWAP. So you don't even have to be a shorter here. Just short that rollover, and we're using these peaks as our stops if we're wrong. And the target was the orange line. And my friends, we couldn't have traded this any better yesterday. We were short predominantly the whole day, and then it got down to this price. We covered and we went long for a little bump into the close.
All right, listen. So I got two things for you. First of all, you don't have the kind of face that I want to punch. People have that kind of face. I feel like you don't. I wouldn't want to fuck with you. Kenny's pretty strong. Kenny does like 500 push-ups a day or something. I wouldn't want to fuck with Kenny. That's number one.
I'm a little dude.
Number two, enough with the victory laps. And can we get to what's moving this morning here?
Yes, we just found an Andy Dufresne, and she's angry.
Kenny, we get it, Kenny. You short the pops when it breaks the VWAP. You buy the dips when it breaks the VWAP. We get it. Now, what are we doing today? God damn it!
You want your lunatic stock of the day? I just missed an entry, and it already went up about $1.50. This is a chip stock that everybody's been hating on. The thing's been dead money for quite some time. But also, just to another thing, I want to show you that the day trader doesn't just look at the 1-minute chart, my friend. We go back and we look at yearlies, decades worth of data just to see where something's been, to see if it's a real significant break. And if you're looking at Hymex, this is a 5-year chart. Let me show you on the 5-year on the weekly. You basically just came out of this downtrend. You just had a faux show. Somebody knew something was happening. Oh, really? So there was a monster move before this move, and now you're gapped above yearly VWAP. A 5-year VWAP, I'm sorry, and you're making your way to that recent high. So when I see that and I see, okay, I'm chasing this thing a little bit, but now that we've got this air pocket right here, we could be looking at the stock at 16 and 17 bucks, and then you go back to the daily, your intraday chart, and again, there's that little confirmation of the buyer, and this is where I missed my trade, and this is where I should have been buying it anyway, and now I'm not in the trade. So I'm going to wait to see what happens. Usually parabolic move, you'll get a beautiful move back. So for all I know is we're shorting this thing at 12 right back down to 1080. But this is a stock I've been familiar with, and it just came out of that Andy Dufresne. Usually they run. So this is again on the radar for sure.
Oh, Andy Dufresne, for those who might not be familiar with the parlance,
yes,
the Andy Dufresne would be a big, long base digestion. So we say all the time, the bigger the base, the higher in space. This is Kenny's more eccentric way of explaining a similar concept. And the HIMX, by the way, is like a Taiwan Semi, like junior. It's a $1 billion semiconductor from Taiwan. So keep that in mind, just for some perspective.
Yeah, so
$1 billion, not a penny stock. I mean, it's a billion.
A little squeezies. Also looking at, again, if you guys looking at Dick's today, you could chuckle. Again, only looking at this stock when they report earnings. Just not a lot of volume, but you're seeing, you caught the prior day VWAP and you're rallying here. I like to watch this stock after the market opens up because then the volume comes in. And then, of course, just going back to some of the trades from yesterday, I have to keep an eye on Oracle, trying to make a little comeback. It was a great trading stock yesterday. Obviously, shout out to Alcoa. Hope you guys were trading that yesterday. Amazing stock to trade. Now, again, I just want to show you this on the chart. There was an anomaly print on Oracle at $47.62. I wouldn't be alarmed about that. Just throwing that out there.
Oracle, that tends to happen to Oracle. I don't know why this stock is.
And there was one more. Some crazy one, Tilly's. This was I think it's a clothing company, but gapped up monstrously. So I'll probably look to short this.
We got a schmooze tonight, Kenny?
No. Going get my daughter. So picking up daughter from Georgia from the airport, and she's gracing us with her presence for 3 or 4 days. So it's very exciting here.
All right,
for you.
No schmooze, but what you can do is you can tune in live at 11 o'clock Eastern. Kenny Glick will be on this very YouTube channel for the long and short of it, reviewing everything he traded so far today and how he did it.
And we'll go over some more of those key levels on the Qs. I'm still debating whether or not we're in crash alert mode because that Sunday overnight session was something. And, it might have taken some of the crashiness out of this market. So we'll see. I'm still a little weary about next week, but we'll address it next week.
All right, Kenny.
See you, Kenny.
Kenny Glick.
In the house.
Nice.
All right, we got, speaking of in the house, we got Jason Shapiro here from the Credit Market Report. And,
fantastic.
Yeah, I'm glad you think so. This was a specific request, I think, from you.
He analyzes price and sentiment. Are you kidding me? This man is. Of course, I like his work. This is what he does.
All right. Well, ask and ye shall receive. Let's bring him out.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Shapiro.
I don't know how I'm going to follow that guy. Jeez, the energy at 9 o'clock in the morning.
Dude, that guy does seriously 300, 400 push-ups a day. Like he just does
yeah, man. Otherwise, I don't know how he's sitting in his seat. Jesus.
He's crazy. I mean, I've known Kenny forever. Like Kenny's so OG, Jason, and he's always been that way.
It's a lot of energy, man. A lot of energy. It's going to be tough for me, but okay, I'll try.
They finally got rid of Tua, right? So now we can move on. We'll see what happens, right?
I've been watching. Oh, you really want to get me started on this?
No. I'm just breaking balls. Jason is a depressed Miami Dolphin fan like myself. But no, we don't have to go
teams, the Ravens, they get an all-pro linebacker. Then they don't want to take him, so they get another all-pro linebacker. The Dolphins just trade all their good players. They don't even trade them. They just release all their good players so the Bills can take them.
Oh. So Jason, aside from our love for the Dolphins, which has been sad, on a more positive note, I've always really appreciated the way you look at markets because if you know anything about me and everybody in the chat, I look at, I'm not a fundamentals drives asset prices guy. It's a positioning is what really drives these huge, huge moves. And you can find the vulnerabilities in the market, and wait for that to turn and take advantage of these massive trends unwinding. There's a lot of different ways to take advantage of that, right? So, for me, it's just kind of like how I look at markets once I finally understood the way that markets work, right? And having hedge funds as clients and managing my own hedge fund and getting that perspective, I think went a long way in helping me finally realize that. But before we get into prices, can you tell us a little bit about how you kind of came up that way? Are you looking at things similar to me in that way? How did you realize all this?
Just over time, it started, by observing both myself and a lot of other people and coming to the conclusion that we didn't know what we were doing and we were losing money. So, and it's like that whole thing of people all go through this. You have a whole bunch of losing trades in your row. You're like, shit, if I just did the opposite of everything I did, I'd be making money. Well, you know what? That's the fact, and if you could get a sample of a lot of people and they're all doing the same thing at the same time, well, then you better believe that you can go opposite that and you can make money over time. So then it's just a question of how to figure that out, what kind of data works, what kind of data doesn't work, how to make sure you don't get run over while doing it. I always say there's a fine line between contrarian and just plain stupid. So how to A, get the data and measure the stuff properly, B, how to then time it properly so that you take advantage at the right time instead of just being a stupid wise ass.
Yeah. So we'll get into how you walk that line, but a few that have stood out to me, some of the crude oil positioning and the unwind that happened there. Your positioning last summer, long the NASDAQ 100, short the Russell 2000, some of the unwind there. Those are a couple that kind of stand out over the last year. I'm sure that you've traded some of the grain unwinds as well. You're in that realm more than me. Any thoughts? Any good examples that you can kind of share with the folks on some of the positioning that you've seen? Who was positioned that way, and then what happened?
Recently, you mean?
Yeah, like in the last 6, 12 months, 2 months, whatever.
I mean, certainly the stock market thing from April was great. Positioning got very short, and it was a real nice buy there. And
last April.
Yeah, and positioning unwound right into October, which is when you would have said there's no more advantage there, and you would have been out, and the market's done nothing since October. There was a great grain trade, bean oil, where people were super short, and like you mentioned, and the thing's gone from bean oil's gone from 50 to 70, in 3 months, right? It's a pretty good move. I think those are a couple good examples.
What'd you do?
Very recently, we saw 30-year bonds for the first time in a very long time. We saw people
throw up that slide too. I got this from your Twitter handle.
Yeah, right.
So can you walk through? You by the way, you put up some of the nicest positioning charts of anybody that I've ever seen. I know you know that, but I'm telling you, and so the rest of the audience hears, because I look at a lot of charts and they know that. So I truly mean that. Like, you do
I mean, frankly, I used to buy these charts. You can get them for free on the internet, but they all suck. I used to buy these charts for myself from somebody. And then the person who started this crowded market report with me was like, well, screw that, I can make them. So he started making these. And yes, not only do they look nicer, you can also change the dates as you want. You can combine, let's say you want to combine not just 30 years, but 30 years with 10 years and 5 years and 2. You can combine those all in one chart. Yes, we do. I have to say, have the best commitments of traders charts out there. Yes.
Well done, sir. So then walk us through, because there's a lot of lines and colors here.
All you really need to concentrate on is the red, is the commercials.
So that's a smart money,
if you want to call it that. Yes.
You're such a cynic. Just call them that. Do you really?
Well, because they're not always the smart money.
No,
right?
fair enough.
They are the hedging money. Hedging, at the end of the day, is a exercise that costs you money over time. There's a cost to hedge. They're hedging, so they're going to lose money over time. So I wouldn't call them smart money. And the opposite of them, obviously, are the speculators, which a lot of times are the trend followers. The reason why trend followers make money over time is because the hedgers lose money. They're providing a market to people that want to hedge, right? So that's why I would say not necessarily smart money. However, at extremes, that script flips. At extremes, that's when your trend followers give back money. When they're all on the same trade, right? Then they give it back. So we're looking for an extreme in the red, because that will, by definition, mean an extreme the other way in the speculators. So you can see that's the shortest that commercials have been, the reds have been in years and years, in the 30 years. Just happened 2 weeks ago. And lo and behold, look what the 30-year bonds have done the last 2 weeks. Now, you're going to tell me, yeah, but the war and the this. I hear that every single time I have a winning trade. Oh, but you never could have known that this was going to happen. Yes, this doesn't guarantee that the market is going to turn. All it does is say, if the market does start to turn, there can be a big move the other way. And that's what we're trying to do as traders at the end of the day. We're not trying to, I mean, most people are trying to, but I don't think that we should be trying to predict what the move is going to be, because trying to predict the future is an exercise in futility. What we want to do is say, let's get into something where if it works, I'm going to make $5. And if it doesn't work, I'm going to lose $1. And let's just keep making five, losing one. Let's keep doing that over time. And then let's keep playing that way. That's the game we want to play. So that's really all this tells you. If the move starts the other way, it could be big. Whereas if it doesn't, well, then you can get stopped and you lose a little bit of money. That's really what this stuff does.
How do you think about the difference between large speculators and small speculators? Do you group them together? Does it depend on the futures contract?
It sort of depends on which contract you're looking at. But in general, I group them together.
When do you separate them?
Like, for example, the stock indices I have found have worked best for me. I just look at the commercials. I just look at the red, which means that the combination of these small and the large speculators will be, but each individual one may not be extreme. Whereas in most of the other markets, I will wait for all three of them to show me an extreme reading.
Where do you think that some of the most interesting extremes are now? You pointed to the bonds. What else you see out there?
The major extremes recently have been in the softs: sugar, coffee, cocoa. That's really where the extreme positioning is. I know that's not where most people are going to be playing. You know what I mean? But you're asking me the question, I'm giving you the answer.
No, I get it. No, 100%. We've been seeing the same thing. And then what do you make? So the VIX futures, right? I've never, I think trading the VIX is really hard. I know people who do. It's just not for me. I look at it very simply as a measure of what the options market is implying for day-to-day moves for the overall market. Like, that for me is what the VIX means. I understand when it spikes, those can be, big lows for the market. And, but, it doesn't need to peak at 30. It could peak at 60 as we've seen, or higher, right? So like, how high is too high? So for me, it's really just a measure of what should I expect for the market today, right? That's how big picture. But I do understand the way when positioning is very vulnerable, because they're at extremes, as you mentioned before. And VIX futures have shown some interesting extremes. Do you include that in your work? Do you ignore it?
I haven't found the VIX futures to be helpful.
You never found it to be helpful?
Not really. I view it exactly how you just said it, quite frankly. And it's interesting you say sometimes it's
you had
30.
something else for me that I was missing.
No, it's like sometimes at 30 it could be extreme, sometimes at 60 it could be extreme. Yeah. I feel like that's true about everything, In retrospect, everything was extreme, right? In retrospect, but when the VIX was at 60, it was extreme. But you could have said the same thing when at 30, right? And you would have gotten run over because it went to 60. And that's why, the just as important as positioning is then market confirmation, right? You're not just going to get in the way of something. And that's what I say, a fine line between contrarian and stupid, right?
Yeah.
You're not just going to get in the way because of any reason, because of price, because of positioning, for anything. If you have a view, fine, but don't get in the way until the market confirms it for you. Otherwise you're going to get run over.
And how do you walk a line between like anticipating a move and and then jumping in, paying more, but having more of a confirmation that it's moved? Do you do a little bit of both? Do you nibble then add? Like, how do you think about entry and exits?
I let the market tell me first, which again doesn't always make it right, but
Right.
which means I'm waiting for it to react the way that it should react. You know, a bull market goes up a lot on good news, and it fights off bad news. A bear market does the opposite. So if I'm looking to pick the turn, let's say it's a bear market, it's going down, down, down. It should go down a lot on bearish news, and it should not go up that much on bullish news. Well, now everybody's short, so I'm looking to get long. So I'm waiting for the bad news to come out and the market not to go down. Okay, it probably goes down on the news and then it rebounds. News failure. That's where I'm looking to get long. Now it can't go down on bad news anymore. Well, why not? Well, because everybody's already freaking short, right? So if you believe in the positioning theory, which is what I live by, I believe positioning is the discounting mechanism in the market.
So right now, everybody's short equities?
I do not think everybody is short equities here. No, not by a long shot.
You think there's a lot more downside in equities here?
I don't know that there's a lot more downside in equities, but I do not think that everybody is short equities.
Somewhere in the middle.
Somewhere in the middle. And I think, again, if you think about what I was talking about with the reaction function there, what are we looking at here in the narrative? It's all become this war narrative, right? Oil up is bad stocks. I am more interested in seeing either stocks go up when oil is having an up day to give me a little bit of a tell, or the opposite, quite frankly. Let oil go down and let stocks go down. You know, I think the big question in the stock market here was, were we starting a bear market before this war even started? The market certainly was weakening going into that. And I only know that because I was actually establishing shorts earlier this year, right? Because in the Russell, because I was seeing that people had gotten a little bit too long that stuff. Well, a lot of it too long that stuff. So obviously I wasn't making very much money in it, but I wasn't losing money. It was, you know, and now, okay, we get this headline thing with Iran, and okay, the market's starting to go down now a little bit, not a lot, but a little bit. But you know, is that the real story? You know, I obviously it's a real story and it's a great narrative to point to. And as an intraday move and as a path, rather than the ultimate path, but the way that the path goes, that's been the story. Clearly, you know, they come out and whatever, they're going to do this and the market rips, or they're not going to do this and the market goes back down. You know, but did we change before that? Is the big question, and I think that tell that I'm talking about will tell us that ultimately, right? If it can't react well to oil prices coming down, well, then we're just in a bear market and it has nothing to do with this other crap, right? I'm not saying that's what's going to happen. I'm saying that's what we have to watch for. You know, there's some very deep, and I don't trade off of macro. I use macro as just a frame, you know, to tell me, hey, what to look for. And how does the market react to these things? But there's some very deep macro shit going on here, you know, with liquidity and all this. I mean, let's face it, this whole bull market has been about liquidity. You know, you could even say since 08, right? Since 08, they created all this liquidity, and then COVID, they created all this liquidity. I mean, liquidity, you know, you talk about positioning, is ultimately money. Money is what makes things go up and down, right? If there's more money, things go up. If there's less money, things go down. How long can they do the more money thing? And I'm not here to say they can't do it forever. Maybe they can. But what I'm saying is,
they've been saying that it can't go on any longer for a long time.
Well, no, that's right. That's exactly right. So you can't say, it's just like all the rest of this. You can't say on a macro level, it can't go on any longer, I'm going to get short. But you can have the theory, you know, and then wait for the market to confirm that.
Let me ask you this, Jason. So at the end of the day, you're not so much interested in like very specifically futures markets and grains. You're more interested in the positioning of participants because you know how that's how markets work. And this is just a great data set to really show us what these participants are doing. Any other areas that you like to look for sentiment and just information that you can use that would
Yeah, I mean,
suggest
on
that
top of
something's getting a little much?
the COT position, I listen. I listen and I read.
Yeah.
People make fun of me because I like to listen to CNBC, not because I think that they offer value, because I think they offer consensus. And that's what I'm looking for, right?
Right.
I don't go in there and say, "Oh, this guy on CNBC said buy, so I'm going to buy." I look at it as this guy on CNBC just said buy, and so did this one, and so did this one, and so did this one. So now I'm starting to get a consensus, right? And you see that all the time on these TV shows. When there's consensus, you can't miss it on these shows, because these people get on there all day and say the same exact thing all day. My wife laughs at me because I yell at the TV. I'm like, how does that add value? You're coming on TV and you're saying the same thing the last 10 people just said. How are you adding any value at all? I don't get it, but you're adding value to me, because I love to hear.
They're not. Well, just understand, not to pick on any networks, but these networks are not there to add value. They're there to convince you that you need to keep watching. So they're telling you what you want to hear, right? Because they have to sell advertisements to the penis pill company or the insurance company or the Ford trucks or whatever.
No, and that's why there's so much value to me, because let's face it, you've been doing this a long time.
I know, you're going to trade, music, bro. I can't watch that shit, man.
No, but if you're going to trade based on information being given to you by people whose motivation is what you just said,
I know,
then you are going to lose.
Can you track it for me and send it to me? Are you doing that?
CrowdedMarketReport.com.
All right. I gotta get in there. Because I'm not watching that shit, man. There's zero chance you can ever get me to put that on TV. I don't even have a TV in my office.
I have it on in the background, and I watch one of the post-market shows. But
all right, so basic cable television, do the opposite when they all agree. Great. What else?
That's pretty much it. The combination of the combination of positioning. To me, it's all about positioning, the psychology, which we just talked about, and the market action. When all three of those align, you got yourself a great risk reward situation, and that's what you want to get into. And that's really all it is. You got to be able to read it. You got to understand the data. Okay, that takes a little time. You got to start getting used to this way of looking very cynically and to what you're listening to and what you're reading. I watch some of these YouTube blogs and all that also when I'm bored, just to again see if the consensus is aligning with the other consensus that I'm saying.
How about so you're looking at the Commitment of Traders report on Fridays, as do I, for the same exact reasons. What about the FINRA report every 2 weeks? Are you looking at ETFs and stocks as well?
Not really.
No? Why not?
I don't trade individual stocks.
Got it. So it's just because you don't trade those things, and it's not. You'd rather look at it on a more macro level because you're trading S&P futures and Russell futures and whatnot.
I just look at what's worked for me for 26 years, man. You know what I mean? Like I don't. People bring.
If you did trade equities, which I do, and a lot of people in the chat do,
yeah,
I find that to be a great resource in the same ways that the futures market, but it's just equities and ETFs.
Awesome. There's no there's no right or wrong. If everything, if it works, then it's good.
Because the futures.
I argue with people all the time about technical analysis, and they say it's great, and I say it's garbage. And I'm like, look, at the end of the day, who cares what I think? And if it works for you, then it's good. Period.
By the way, for the record, Jason,
money doing it.
For the record, I know the market is open, so I'll let you go. What you're doing is technical analysis. You're analyzing the behavior of the market.
It's a type of technical analysis. You're correct.
100%.
And it doesn't, like I say, it doesn't matter.
Don't be hating on technicals. Don't be hating.
If it works, then it's good, dude. That's all I'm saying.
It
doesn't matter what I freaking saying. It doesn't matter what I think. It doesn't matter. What matters is, are you making money doing what you're doing? And if you are, then do it. Jason Shapiro, fuck you. Who cares what he says?
I love it. I love it. Guys, Jason Shapiro, Crowded Market Report, the man. Dude, I love how you look at markets. One day we'll be celebrating the Super Bowl about the Dolphins. One day. You'll see what happens. We'll see what happens. Markets will go up, markets will go down, and the Dolphins will still suck. It's just what it is.
Yes, correct. Terrible. That's one thing that we do know.
Oh, all right, my man. Thank you so much. You're awesome.
Right, we'll talk to you, bro.
Appreciate it. Jason Shapiro. See, Spencer? See why I told you to bring him on? You're on mute, Spencer. There you are.
I'm going to clip out the end of the end of that, just there, the very end of that conversation. That was
Dude,
great.
don't let anybody know I just said that. But I mean,
No, no. The idea, if it works, just do it. Right?
Oh, yeah.
If it works,
Don't
do it. That's all that matters. All right. Before we go, wait, we have Sean in the house. I want to bring him out. Sean did had a great post yesterday about his relationship with Edge. This complicated relationship with Edge. I was hoping he can maybe talk about that.
Edge, the WWF wrestler?
I think that's what he was referring to. Yes.
Got it. Shout out to WWF. There he is.
I found myself nodding ahead with everything that Jason was saying, not only about nobody knows anything, but great stuff about the Dolphins too. Yes, they will continue to suck. So great job, everybody. I saw that Tua was putting his house up for sale. That the tent there on the side of the field. That's the injury tent. He put his condo up for sale. That's good.
Oh, that's a little low blow.
Yeah. No, but listen. What
Actually,
Shapiro said.
It's a head blow, actually.
Spencer, we'll get into what you wanted to talk about in a second. But what Shapiro said really echoes something I saw somebody put on Twitter the other day. He said that in the first year of trading,
stop. Get this off the screen.
There it is. There's Edge. Shout out to Edge.
No idea who that is. Look, in the first year of trading, nobody knows anything, or nobody knows what they're doing. And then when you're into the game for 10 years, you realize that nobody knows anything. Nobody knows anything. All we can do is manage our risks. And so what Shapiro was saying, I'm 120% on board with him. Shout out, Jason. Good job. Sorry about your team. All right. Edge. Spencer, you wanted to talk about Edge.
Not the Edge or Bono.
No, I mean, I'll just cover it quickly. I was writing yesterday, and by the way, I've been doing a deep dive, not a deep dive, but I've been doing a series of posts, digging into Mark Douglas's, what's that book called? Mark Douglas's book, the one. And he talks about the five.
The Zen?
What's that?
Zen? Trading
No,
Zen?
no. Mark Douglas's book is, I should have it right here handy. It's Trading in the Zone.
That's what I said. What did I say?
Yeah.
Oh,
And we're getting into his 5 fundamental truths about trading, and so that's what we've been writing about on the blog for the last week. And yesterday we talked about Edge, and I have a complicated relationship with the concept of Edge, and I didn't have an answer to my question, but my question was, do I have an edge just because what I've been doing repeatedly over and over and over has been making money? Does that make it an edge? Or have I just been in sync with the market and my edge will work until it doesn't? And then what do we do? And then how do you know when your edge has expired? And that's more art than science, right? Like, it's one thing to have an edge and to believe that, okay, it might lose 5 trades in a row, or it might have a 20% drawdown over 6 months. That's normal. But at what point is that how do you make that decision that, oh, well, no, actually things have changed and my edge is gone? And I don't have an answer to that. I think these are just the things that traders wrestle with. If you're putting the time into the market and you're doing it for any length of time, these are questions that you have. And so I just I put that question out there, and if anyone has any feedback on it, I would love hit me up on the old Twitter options, Sean. Let's chat about it.
So I love when people talk about you have to find an edge as if that's so easy. Oh yeah, don't worry, I'll just find an edge. I'll just go out to like Edgeland and just grab an edge, an edge off an edge tree. You know what I mean? Like, it's not so easy to find an edge. Right? That's the hard part.
You know what? Before we let's move on from that, because there's something else.
But hold on, but I want to mention something on that, Jason. One of the things he said that I thought was great, and you kind of started alluding to it when you first start out. You realize that you don't know anything, and you do this for another 10 years, you realize, oh shit, nobody knows anything. And the old saying of, well, if I would have just done the opposite of what I did all those other times, I would have made money. Well, there's actually a way to do that, right? And when everybody is acting in the same ways, you can actually take the other side. I mean, that is what we're doing by analyzing sentiment. That's what we're doing by taking the data that we see from what investors are doing and doing the opposite, particularly when you can pinpoint which types of investors are acting a certain way. And you see that in the options market, you see that in futures markets like Jason was showing. You see that in the FINRA reports every 2 weeks. You see that in the positioning. You know, the Goldman Sachs prime books and the Bank of America books. Put it all together. There's no one, you know, secret formula to calculate is everybody wrong or not. But there's a lot of different ways to put the piece of the puzzle together.
Absolutely, absolutely. Shapiro's right on, man. Always respected what Jason has to say. Hey, by the way, any All-Star Option subscribers out there, we just closed MPC calendar spread just now, just closed it at a profit target. Anyway, I wanted to bring up one thing, Jason, or JC, you were talking earlier about you're watching software stocks as kind of like the clue, and if we're going to have a bear market. I agree with you. Software stocks are something we should watch, but I think also what we should be watching are these asset managers, right? These ones that are having liquidity issues.
100%.
KKR, Blackstone, Ares.
DM.
I'm short all these names, not because I'm following the story, but you know, the funny thing is when charts lead the story, right? I got short these names when they were making 52-week lows, not because I had any insight on what's going on with liquidity issues. That story came later, right? And we talk about this all the time. Only price pays. And it's funny how the narrative often catches up to what the charts are doing. And we've been seeing that in these asset managers. We're also starting to see it in the banks, JP Morgan, Bank of America, not doing so hot. If you follow the price action, the news will find you.
Yep. That's a great way to put it. I never quite heard it that way, but that is spot on.
Yep. Also, little side note, guys, you were also talking about VIX today, and I don't know if you guys have covered this in the news, but do you guys know that in a week or so, I'm not sure the exact date, but in a week or so, there's going to be a new Bitcoin VIX launched by the SIBO? Do you guys know that?
No.
Yeah,
What could go wrong?
Bitcoin VIX, you know, measuring the 30-day forward-looking returns on VIX or on Bitcoin, and
What?
I'm sure a whole
What took so long?
It's a good question, but I'm sure a whole new product suite will come roaring through.
Because now you're going to get the triple leveraged Bitcoin volatility ETF. You know, it'll be fabulous. Listen, as long as they keep creating new ways for investors to blow up their accounts, I'm all for it.
No, that won't happen with Bitcoin at 70. Bitcoin has to get to 100 for that to happen.
Triple leveraged Bitcoin volatility ETFs?
Yeah,
the UVX, like to put it in Kenny parlance, the UVXY of the blockchain.
That won't happen with Bitcoin at 70. Bitcoin at 100, yeah, they're all going to come. But
you're going to get both sides. You're going to get the long and the short. So it doesn't matter.
Yeah, okay, you're probably right.
Yep.
But, all right. I did put the link, by the way, to Sean's blog post.
And then they're going to keep splitting it and reverse splitting it forever.
Yep. All right, market's open. What are we doing?
We're going to go trade, I guess. Yeah, so let's go YOLO. Big day for us on the channel, okay? We have at 10 o'clock here, right after this show. If you're watching this on YouTube, you'll be redirected automatically to the $1 million question. Stephen Weitzel will be joined by a special surprise guest. I won't say who. Special surprise guest live or it was recorded at Future Proof. That'll be at 10 o'clock Eastern time today. Kenny will be live at 11. Thursdays are our busiest day on the channel. So after Kenny, we'll have the Gold Rush guys who are going to be live at 2
Shout out Jason Sam.
Jason and Sam, they're talking about the death of the energy trade. Sean is live at 3 o'clock with the jam session. Louis is live at 9 o'clock, Crypto After Dark. He's talking about the implications of the Iran conflict on crypto markets. Yes, there is a connection. Louis has made it. So a lot going on. And of course, not to forget, 4 o'clock today, JC and Strazza, right after the close, talking about fast money charts. Use the link on the screen. Get the free watch page. It's right there.
I can't wait for that. I'm stoked for that. I haven't dove in with Strazza in like a couple of weeks. I'm stoked.
Fast money, fast trades, fast charts. It's today at 4 o'clock. Use the link that's on the screen. You'll get the watch link directly from that page. And that is it for us here today on the morning show. So thank you for watching. Go make some money, and we will see you on any one of our upcoming shows.
Adios.
Run it. I can't take no loss. I don't even know what it costs.